Okay, so I will repeat. Impound account or escrow account is the same thing, with just two different names. An impound account and escrow account, meaning when we create an account where lender will hold our money and waiting for the day we have to pay our property tax and insurance to pay for us. But every month we have to pay property tax and insurance together with our mortgage. Okay. And the reason is some people, lender require them to do that because when they have less than 20% down, or sometime when you do an FHA loan, you always have to have an impound account. When you have an FHA loan, normally you do less than 20%. But anyway, if you do FHA loan and you even have 30% down, you still have to have an impound account. So it relating to the mortgage insurance. So when you have to pay mortgage insurance, lender make sure you pay it every month. So they make you pay the mortgage insurance plus the property tax and the home insurance together with your mortgage. That's the purpose of the impound account. And some people, lender don't require them to do impound account because they do 20% down and they don't need to do the impound account. But they want to do impound account because they think it's convenient. Instead of writing 2 checks to pay for property tax twice a year and one big check for home insurance once a year, they think it's convenient to break down the payment and they don't have to remember when to pay for it. And also they don't have to pay one big lump sum to their property tax twice a year and insurance once a year. So that's the purpose of impound and escrow account. You want to go further on this one, like when you do, your client do a refinance, right? And they say, I want to do impound account. And if they close the loan on September, they will see they have to bring in a lot of property tax and insurance. Why? Because we know there are two and those are 2 due date for property tax. And if your loan closed in September, like of advance in your property tax and 12 or 18 months of home insurance in advance at closing. So people who create impound account and they close it a month of August or September, they see themselves bringing a lot of money in advance to pay for that property tax and insurance. Why? The why? Because if we close the transaction on September, then our first mortgage payment is November. And November is only one payment, 1 month payment of property tax and insurance. And then December comes very quickly and the lender have to come up with 6 months of property tax to pay for us. So they have to collect 9 months in advance because by December, they have 9 months in advance plus 1 month in November, maybe 1 more month in December, 11 months, right? They pay 6 months in December, so they have 5 months left and due on, right? And they, of course, they always want you to pay overlap 1 or 2 months. So they have to collect in advance. So if you have any question, let me know. This impound account, escrow account is really confused. It confused our borrower a lot. Every loan that I close with impound account, I spend at least 30 minutes to explain to my client why they have to bring in 9 months of advance property tax and 12 or 14 months of home insurance. And of course, different month close will be different amount of advance to bring in. So if they close in April, they don't have to bring that much money in. So it really depends, okay, on what month they close. Okay, that's the first one. I see something in the chat box. Oh, anh Đào asked what is the due date for property tax? I think I say it in December 10 and February 12. Okay, February 10. February 10. The next question: must I use the mortgage company? Now, how can I avoid private mortgage insurance? Okay, so when you see PMI, it's private mortgage insurance. And when you do an FHA loan, you will see MIP. They are different. They are mortgage insurance, but they're different. So the PMI is private mortgage insurance. Normally, those insurance company sell the mortgage insurance to the lender who do conventional loan or only sell it to conventional loan. So it's called private mortgage insurance. But for FHA loan, it's a government loan. The MIP is a mortgage insurance premium. So the HUD is the one who collects that MIP, okay? The PMI is collected by a private company. So that's the two different things. How to avoid it. There is a way to avoid it, but only conventional loan, okay? Not only when we do FHA loan, we do less than 20% down, or doesn't matter how much percentage of down payment, we have to pay MIP. That's a requirement, and there is no way to avoid MIP on an FHA loan. But when we do conventional loan, yes, we can avoid PMI. Am I confusing you? PMI and MIP are the same thing, okay, for different loans. So now let's talk about mortgage insurance. We don't say MIP or PMI, it's confusing. But anyway, remember, FHA loan, there's no way to avoid it. But conventional loan, yes. How? Lender give you an option to do one single payment. That means one payment in advance. You say, okay, they say, okay, how about you pay me 3% of the loan amount, and that's it. You don't have to pay no more. But of course, the amount, how much you have to pay, depend on your credit score, your loan amount, your LTV, a lot of things, okay? But there is another option, which is a better one. It's called lender pay MI, lender pay mortgage insurance. And normally, lender will pay it for you. You see, you don't see that the lender make you pay 3% to 4%, but actually, it get in your interest rate. So instead of, if you pay your own mortgage insurance in your conventional loan, and your rate is like 3%, and if you said, can you do lender pay MI for me? Yes, and your rate might be 3.5%. So the rate increase so that the lender have the credits that cover the single mortgage insurance for you. Okay. Any question? Or we can move on. So you're not really avoiding it. You pay a different way, right? You're not really avoiding paying mortgage insurance. You pay single payment, or your rate gonna increase because lender gonna pay it for you. Okay. The next question, must I use the mortgage company that my builder directs me to? Anyone want to say something? You can unmute yourself and say it. Yeah, because you've been selling home to builder, you should have experience. We have Alex here. He do a lot of new home. Alex, can you answer this question? You can unmute yourself, Alex.
Well, we don't have to use the builder's in-house lender. However, I found out that a couple of my buyers chose to use the in-house lending of the builder because the incentive was good enough to pay for all of their closing costs, and part of it is used to pay for some of the gallery options.
Awesome. Thank you, Alex.
Okay.
So Alex saying we don't have to go with the lender that their builder tell us to do. That's right. Unless the builder said, I give you 20,000 incentive, but you have to really make sure that it's a real incentive, because there are situations, I don't say every situation is the same, but I remember one of my clients, of course we helped him to buy a home, a new home, and the builder said, I'm gonna give you the incentive to, and if you do a loan with me, I give you like 7,000. And luckily he not so sure, so he asked us to also do the loan for him. So he had two applications, the builder and us. And then at time of locking the rates, the builder offer him is way higher than the rate we offer him, because the lender tried to get the credits from the rates to give that to him. So it's the same. If we do the same, if we want to give him $7,000, we just increase his rate, right? So it's exactly the same thing. So in that case, we win the transaction. The client know, this guy tried to trick me. That's it. So he said, I'm not gonna close the loan with him. I'm gonna close the loan with you, Min Chao. So I give him a much better rates. He doesn't need that 7,000 incentive because it's his money anyway. Because the lender increased his rate crazy to give him the 7,000. So he said, I don't need that. So he go, of course he have an option to lock a lower rate, but because the builder promised 7,000, so they have to think about to come up with 7,000 in a way to increase his rate. Otherwise, they don't want to get them 7,000 from their pocket. So in that case, I win the deal. So you have to, when your client say, I want to go with the builder because they give me incentive, you have to really pay attention to the incentive. Make sure that's a real incentive. It's not from the borrower interest rate. It's borrow money anyway. So yes, they don't have to go with the builder, but we have to really work closely with the buyer to make sure the best thing happened to the buyer. Okay. When my lender told me my loan is approved, where am I in the loan process? So I will introduce to you the next slides with the blog that the idea from Mr. Ramos. Can you move to the next slide? Not the first one. So normally your client receive in the when one of our team member send an email to your clients. At the bottom of the email, you will always see this in the email. If the loan is approved, you will see the approval will be red. If it's a loan just submit to the lender, you will see the submission red. So why do we have to put this in our emails? Because we want to show our borrower where they are in the process. So the first one in the process of loan is to provide document. That's where we call setup. Because my team have to, make sure we have all the document, and then we input all the document information into the loan application, and do the loan structure to make sure the loan works. Do the mortgage income calculation and stuff like that. A lot of work before submission, and then when we're done with the setup, we can submit the loan to lender. And after we submit the lender, a few days depend on, right now, the turn time is completely insane with some lender. One of the lender we're using, which new to us, called One American Wholesale, 3 to 4 week approval time. So we submit 4 loans there. We just want to see how it works. And in almost 3 weeks, we have no approval. This is crazy, right? Of course, those are refinance. But anyway, depend on which lender we submit the loan to. We have a lot of lenders, and some turn times really good still. So when people are approval, they still have 3 more steps to go before it complete. So after approval, normally lender approve a loan with conditions. So that's why borrower receive an email from my team asking for more documents or questions. And after we submit all the documents and all the answer to lender, if lender's happy with all that document and all the answer, they will clear all the condition, and we come to the next step called clear to close. When we are at clear to close, what's happening? That lender will issue a closing disclosure and it's sent to our client, assuming that our borrower locked the rate already. So that and when we are clear to close, the CD will be issued, and when our client sign the CD, we can draw doc the lender can draw doc for us, and 3 days after the day the client signed the CD, the client can sign the loan doc. Okay, and after the client signed the loan docs, lender fund the loan. After lender fund the loan will be recorded in the county. So if somebody approved, they are not even halfway. They're almost halfway. Okay. Next slide, please, Hera. Yes, and
Can I clarify with you on the previous slide between the clear to close and funded? Do you mind?
Yes, go ahead.
So if I understand correctly, on the clear to close, which is after we clear all the condition and the lender gave us a green light to approve, then we have to lock, right? And then the client will sign CDs, and they on the day that the client completes signing CD, doc will be 3 days turn time. Is that what you say?
Okay, good question. And now, so when normally we can lock the rate like between approval and clear to close anytime, but sometimes we wait. For example, we haven't locked the rate yet. So by the time clear to close, definitely we have to lock the rate, because some case the client say, I want to wait for a better rate, and they wait until, we can let them wait, but wait until clear to close. We have to lock, because clear to close meaning we done. You have no time to wait. You have to lock your rates to move forward to close the loan. So by the time we clear to close, we have to advise our client, we need to close the loan. In order to do that, we have to lock the rates. So when the client decide to lock the rates at clear to close, then on the day we lock the rate, the lender will issue a loan estimate. I skipped one step before. So the loan estimate go out first, and then a day later, CD will go out. So LE and CD cannot go out at the same time, same day. No. The borrower, after locking the rates, that's either the same day or the next day, depend on the lender timeline, they will issue a loan estimate. And client borrower have to sign that loan estimate, so that the next day, the lender will issue the CD. If lender issue the LE, that means the loan estimate, and the client didn't forget to sign it, 2 days later, the borrower signed the LE, then 3 days later, the CD come out. So the CD only come out after the LE is signed by the borrower. Okay, and the day the CD is signed is really important, because we need 3 days from the signing CD to the day the client can find the final loan, can sign the loan docs. There is only 3 days, okay? And of course, 3 business days. But what in these 3 days, the Saturday is considered a business day, okay? Remember, at closing, Saturday is considered business day. Sunday is not. Okay, of course, if there's a holiday, then we lose another day. Okay, but after client sign a CD, 3 business days later, the client can sign the loan docs. Did I answer your question, Anda?
Yes. Thank you for clarifying that date.
But thank you so much for asking the question, because when you ask the question, I will stop and I will do a better job. But otherwise, I just moving fast. Thank you. Go ahead, next slide here. Okay, this one is a very important question. I think we should pay attention. We need to be able to help our client. I think this is super important. If you don't understand it, then who your client will lean on? Every time I rate to my client, they ask me this question. And I always spend time with the client to explain to them what good, what is bad, should they pay point. I really spend the time there with them because it affects their loan for maybe 6 months, maybe 30 years, maybe 15 years. And that's a lot of money. Okay. So the question is, Jay, and would you like to read the question? Because this is important, right? I want you to read it. I can't hear you, my dear.
The first one?
The first one, yes.
Should discount points be paid to lower or buy down interest rate?
Thank you, Jay.
Welcome.
Okay. So, any idea, everyone? Should we pay down? Do we pay point to get the lower interest rate? Any idea? Just one idea. No wrong.
Personally, I don't.
You don't. Okay.
I don't.
Okay.
Because likely I will refi in a few years.
Oh, okay. Cool.
Because that's sometimes that can be a lot of money. Paying down the points, meaning you're gonna pay the fees, obviously, right?
Right.
The fees about $3,500 already.
Mm-hmm.
If you calculate the amount of money that you save each month by buying down, right?
Right.
And the amount of money, let's say you put down $5,000 to buy down the points, but you're actually only saving $75 a month. You got to take 5,000, you divide it out 75 to see how many more years it's going to take you to really gain from buying that point down, buying that rate down.
That 5,000, right?
Right?
Yeah, that's right. Very good.
And then within those years, you're probably going to refi again anyways.
Right.
Or sell the house or, yeah. So I usually don't.
So, Chị Anh Vũ, you make a very good point. For people who knows that he or she will refinance again within a year or 2 years, then why pay point? Because, yeah, like you said, it might take 5 or 7 years to recover the fee and the point you pay right now. So in that case, of course, no. So for people like, they know they're gonna sell the house within 5 years, then what the point of paying point or fee, right? For people that think he's gonna lose a job within 1 year, what do you think he should do? He might not, he retire, like he never go to work again. Then he should pay point for sure, right? Because in that case, he locked in the lowest rates. So right now, if people have a lot of money, they can lock in the rate at 2.125, 2.25 to keep that rate for the rest of the loan, like 50 years or whatever, you know, they lock it in and done. So there are people, when I talk to them, I say, what is your plan? When they ask me, should I pay point, Minh Châu? Because I give them an option. I say, here, if you don't pay points, your rate, this is your rate for paying point. And they ask me, Minh Châu, what is your suggestion? And I ask you back, what is your goal? Do you plan to stay in this house forever? Do you plan to refinance the next 12 months or 1 year? Do you plan to cash out in the next 2 years later or something? I ask them all the questions, find out what is their goal. Because it really matters what you do right now, affect your future. I have one client, he say, Minh Châu, I'm thinking, because he's working 2 jobs right now and he getting, you know, of course, older. And he said, I'm gonna only work 1 job next year. So I don't think I can qualify for my loan next year. So what do you suggest? Of course, I suggest him to pay point. I say, go ahead, pay point. To get the rate, the lowest rate that we never had before in our history, get that rate. And then you don't have to worry about your loan ever. You don't have to refinance anymore.
I have a comment. My aunt just refinanced, and how they went about it to lower down her interest was, it looked like on paper that she was paying 1 point, but in reality, the lender was giving credits towards that.
Can you ask the question one more time?
Yes. So basically, on paper, my aunt looked like she was paying 1 point, but the lender was giving her a credit towards that point.
That's weird.
How does it pay her that 1 point? They
No,
pay
I don't
her
know the details.
outside?
I don't know
That's
the
weird.
details. I just thought I made a comment.
Okay, listen. When we do loan in the USA, everything is black and white on the paper. If you pay point, it show paying point. If you get credit, it show getting credits. There is no two things happen at once. Like you cannot pay point and get credits. That doesn't make sense.
Yeah.
Because when
Okay.
you pay points, why do you want to pay points? You want to pay points to get the lower interest rates. And when you get the lower interest rate, there is no credit from lender. Unless, for example, if you buy a home and your selling agent give you credits, that's from the sell side. It's nothing to do with the loan side. So in when we do loans here, we don't give credits outside of escrow. Everything on the paperwork, on the closing disclosure, and on the final statement. Meaning, if the client pay 1 point to get the very low rates, then there is no lender credit at all, because lender credits only kicks in when the rate is high. Like I do, I do a lot of talk show, and I talk about no point no cost with PITI. There's one example, like for example, you do your loan refinance 3% rates, you have to pay 3,000 closing costs. But if I lock your rate at 3.25, you pay no point no cost. So this is just an example, come out of nowhere, okay? So don't quote me on the rates right now. So anyway, so when we lock the rates at a higher rate, lender kicks in the credits, and we use that credits to pay for closing costs. So the same thing when you say, I want to do lender pay mortgage insurance, same thing. Lender you have to lock in the very high interest rate so that lender will have enough credits to cover your mortgage insurance. Okay, so there are no points and credits happen in one statement.
Okay, got it. Yeah,
Okay.
thank you.
If you want me to see that statement, I'd be happy to. Okay.
Okay, thanks.
All right. Any more question? I see a chat. Okay, Taylor. Last date of the year to pay county property tax without late payment penalty, November and April. Okay, that's the, okay. The due date is December, wait a minute, no, what you're saying, I'm giving you a wrong date. I will check on that, Jennifer, but when it comes to April 10, that means you late already. You have the time, like your, for example, February 10 is your due date for property tax, but you have until April 10 to pay it. But if by the time your money gets there about April 10, you are in delinquent already. Okay.
That's why, that's why I said November 10 and April 10, the last day you should pay, so you won't get the penalty. But the due days are earlier, sooner than those days.
Yeah. I see. So that means the first.
Although you're late, but that's like the grace period the county giving you.
Okay, I see. I
Yeah.
got it. So maybe I missed the first installment date. The second installment date, I think, is April, is February 10th, but the first one, I forgot what it is.
It says the first installment date is November 1st and delinquent after December 10th.
Oh yeah, December 10th. That I got typo. Yeah, December 10th is what I mean.
So the for February, the due date is Feb 1st and delinquent after April 10th.
Yeah, December 10 is what I mean, but I got a typo there. November 10, December 10 and April 10 without penalty if you pay before those days.
Due date is Feb 1st and November 1st.
Okay, cool.
Delinquent is April 10th and December 10th.
Okay, so
That's
the
correct,
first installment should happen in October 10 then?
No, first installment is November 1st.
Oh, November. Okay, cool. Thank you for clarifying that.
Minh Châu, I had a question, Minh Châu.
Yes.
Go back for no point, no cost. So like you said, if the lender have to kick back for us, so we had a month, so the lender can pay the fee for a client. If what you should recommend, if the client say, okay, no point, no cost. So you recommend people is rather pay a little bit fee, better they take the high rate, like you said, 3 point or the 3 point a quarter. So what usually you recommend with the client?
Okay, when you recommend your client to do no point, no cost, you have a reason. You have to have a reason. You have to understand the goal. Again, it only will it benefit the borrower. It's not like, oh, you just do no point, no cost. So normally, right, if I know that my client save $500 a month already, then why not still do no point, no cost, make our client happy? You know, as long as you save the money and they say, okay, I'm happy, I don't want point of cost, I save $500, I'm happy, then yes, go no point, no cost. Also,
But the rate will be high for the client, Minh Châu, right?
You pay either way. With
Yeah,
the
so the
lender,
rate
you're
will be
paying either
higher.
way. You're gonna pay over 15 years, or you're gonna pay now. So you gotta explain to the borrower, they're gonna be the one who's paying either way with either choice, right? And which choice do they want?
also,
But if
I want to
that's
say
case,
this.
okay. So
See,
because
let
I
me
think,
answer your question.
yeah.
So if your client said, you know, if your client told you this, if rates reduce again the next 6 or 12 months, can you call me to refinance again? This client definitely want a no point, no cost. Okay.
Yes.
You don't want them to pay anything now because they know they're gonna refinance again next 6 or 12 months. Why paying now and then you refinance again?
You don't know, but we don't know. Actually, we don't know the rate will be lower or higher, you know, in the market.
In that case, sometimes you have to explain a good and bad, and then your client have to decide themselves. We cannot make decision for our client either.
Yep.
When you say, I don't know if the rate gonna go lower next year or 2 years later, you're gonna stuck with this rate. If the client feel the same way, if you have fear, like your client have fear, then just pay for everything and get the lowest rate, right? If you feel like, I know for sure it's gonna be lower, or if you know your client at some point gonna sell the house, like in a short time, within 5 years, then you know why pay for point cost. So you go back whenever you advise your client, you have to find the goal and what is their plan for the future, and will paying point and cost benefit them.
Okay, okay, I got it.
It's case by case. It's
Yeah,
case by case.
yeah.
You have to talk to your client. Yeah.
Yeah, I got it. Thank you, em. Yeah,
yes,
I got
it for sure. Okay. So what are the benefits of doing first and second lien combination? So you know, a lot of people in the past, they have 2 mortgages in one home, right? And the first mortgage normally is a big loan amount, like 400, 500,000. And the second lien, meaning the second loan, normally have 100,000 or 150,000 in there. And a lot of time people come to us and say, you know, I want to combine these 2 loans into one. Also, in order to find if this gonna benefit your client, you have to really pay attention to if you combine the loan together, what is the interest rate? Will it really save the money? I think one of you asked me to do loan for someone when we combine the 2 loans together, it's 850,000. It's undown, right? But when we combine the 2 loans together, it becomes jumbo. And when you combine first and second, it's also called cash out refinance. Remember, a combination of cash out refinance and jumbo, the rate is really completely crazy, and client have to pay so much point and cost. It benefit no one. In that case, no. The only thing you should do is subordinate your second, meaning keep your second loan and refinance your first loan to get the lowest interest rate, because the first loan is a big loan. It's 600,000 loan. As long as you save money on the first loan, you save money every month. So you have to work on the loan to find out if it benefit your client. And let me talk about subordination. We're running out of stop at this question, but before we're done, we talk about subordination. When we had 2 loans on one property, first and second, let's go back to client loan. the first loan is 600,000. The second loan is 250. I suggest, and now don't do combination. Don't combine two loans. Don't do refinance cash out. It benefit nothing, but it's a cost. It costs so much. So then how do we do that? We're gonna just refinance the first loan to lower the rates for the client. What to do with the second loan? Okay, listen, this is important. The first, why they call first and why it called second? Call first because it's recorded, that lien is recorded on your house first. And why did it call second? It is called second because that lien recorded on your house after the first lien. Okay. And remember, the lender who lent the client 600,000, he always want to be the first lien holder. He never want to be the second lien holder. The 250,000, we call it a second loan, and it should always be second. But now when we refinance the first one, 600,000 now, if we record it in October of this year, of course, it is recorded after the second. Then it becomes second. My lender, no. I don't want to be the second. I have to be the first. So how do I keep my 600,000 loan that recorded in October become the first lien holder? I will have to go to the second lien holder and ask them to approve that they will become the subordinate of my first, meaning they still be the second loan on this property. So I only refinance the first loan, 600,000. At the same time, I submit a loan package to the second lender. It's called subordination. Send it to the subordination department of the second lender. And when the second lender approves this loan as a subordinate, of course they have, when you submit the package to the second lender, you have to submit the approval letter of the first loan and the appraisal report of the first loan as well. And I think we have to pay a few hundred fee, and normally client is the one who pay for that fee. So the client have to pay a few $100 fee together with we have to submit that together with a application and the appraisal report of the house and the loan approval of the house. We send the whole package. Normally we mail it or a fax to the second lien holder, and the second lien holder might take 3 to 4 weeks to approve it. So once the second lien holder approves the subordination package, we can close both first and second at the same time, and the second still be the second loan. And this time we call it subordination. Okay, are we clear here?
What do you mean by close the second?
I mean, because the second now have to be recorded after the first.
Still have to be recorded.
Again, you know, like first and second.
Okay.
So the first had to be recorded before the second, and the second approved all that. Okay, let's do that. We okay to be a second loan again, second lien holder again.
Okay.
So Jay, what is the turn time for the total if we do this? How long for us to completion?
When we have subordination, it takes longer and down. So we don't suggest to lock rate until you know exactly when your subordination package is approved. Because nowadays, it might be longer. But in the past, it's 3 weeks.
Wow.
A lot of my clients, they say, oh, just let me pay off the second, but not everybody have the money, right? So when we don't have the money, we have to subordinate the second.
Okay. Sounds
There,
like
the second lien holder always agree to subordinate most of the time.
What
Yeah.
if they don't? Is there any cases they don't?
Question.
They only, okay,
That's
second
the
lien
question.
holder, they only agree to subordinate.
Okay.
Thanks.
So when we submit a subordination package to lender, they always approve. I never get any loan that denied. So
Okay.
that's what I'm thinking.
That's what I'm
Okay.
wondering.
It's always approved, yeah. All right, I think because it's past the 11, it passed 11, so I will stop right here. We'll continue next week on what is supplemental property tax and what does prepaid interest. All the thing we talk about will be, you need to remember and understand, because this is all questions come out from your borrowers, and it's really important to know. Any question before we go, anyone?
I mean, I do have 3 questions, but
Go
maybe
ahead.
we could cover it next week or right now. Okay.
Just ask me if it's a long one. I'll wait for next week, but just ask me now. I can put it in.
Okay, great. So for the mortgage insurance premium, you know, when it's an FHA program, how do you calculate that premium?
The mortgage insurance for the FHA loan is normally 0.85% of the loan amount.
Got it. And also for the taxes, how many months do the borrowers have to pay?
How many months what?
How many months do the borrowers have to pay for the property taxes?
In advance, do you mean?
In advance, right?
There is a schedule, Eric. If we close on September, we will have to pay like 9 months in advance. I will send that schedule out to the company. So I hope you receive the email. It depends on what month you close, how many months you have to bring in advance.
MC?
Okay. And
Oh, go ahead, sorry.
And last one, for conventional, you said in order to avoid a PMI, I understood the lender paid MI, but the single payment, that's 3% of the purchase price of the loan amount?
The loan amount.
Right.
Don't quote me on the 3%. I just throw out one number. It's something.
Okay.
I don't know how much. It's not only 3%. It's not 2%. It depends on a lot of factor of the loan. Like it depends on the loan amount. It depends on the LTV. It depends on the FICO score. And I am not the one. There is no one fixed rate. I just throw out one number. Okay?
Got it. Thank you.
Of course. Thank you for the questions.
MC?
Hello, everyone. Thank you so much for participating. I love to see you every Tuesday. I love to talk about loan because that's my life.
MC,
Thank you,
I have a
Michelle.
question.
I learned a lot today. Okay, I have to go now. Bye,
Someone
guys.
has a question.
MC?
Go ahead, Chi.
Can you explain again? So if we close in September, why do we need so much money upfront from the property tax if we do impound?
Hold on just a second. Because my dog is so noisy.
Dog barking.
Go ahead again, Chi Anvil.
Can you explain again why does it cost so much when you close in September? Why do they have to pay so much property tax if they have impound?
Oh, I see. This is a very good question. Okay. Again, if we close the loan in September, when is the first mortgage payment?
November.
October, November.
Yeah, November. When is your, okay, November is your first mortgage payment. It's also your first month of property tax. When do you have to pay for your property tax?
December.
So by December, lender had to send out a check maybe beginning of the month. They can't wait for your second payment. They just have to send out 6 months of property tax. You think they have the money? They only collect 1 month of November property tax, and now they have to pay 6 months of property tax for you. Lender never done that. Never do that for us.
6 months here covers what? Covers the
property tax to pay for the first installment, right?
For the next.
No, remember, Mr. Lee just give me like the first installment is December 10. Okay, December 10. When you pay December 10 property tax, that's called the second installment. Actually, that's the second installment.
And I think that's the first.
It's paying for July 1st, property tax from July 1st to December 31st. You see, you're paying your second installment on December 10, but the payment is covered from July 1st to December 31st.
But you just own the house for a month.
Okay, if it's a purchase, then the the seller already pay up all the way to the day he sell the house,
Right,
right?
right.
And then whatever month left, lender will collect it at
Okay.
closing to get it done.
Okay,
So it have to be done at closing. But
okay.
the lender will have to collect more money because the next installment is
It's
on
February.
February 10.
Okay, okay.
And February 10 is the first installment paying for January 1st to June 30th.
Okay.
30th. So
They pre-collect.
yeah, because the February 2nd, by February 2nd, lender only receive, I don't know how many months already, only a few.
2 or 3, yeah.
Yeah. And he have to come up with 6 months. They know.
Yeah, okay, I got it. Okay, I got it. Thank you.
Question. I have another question. Mr. Lee saying, example, they are buying a house and they qualify for 600,000, but the price is 800 and the buyer have 120. Can the seller carry back on the transaction that the first lender allowed? Some lender allowed, but still lender will have to look into the DTI because even the carry back loan 80,000. Okay, let me read the if you want to read it, it's in the chat box. Mr. Lee say, if somebody qualified for 600,000 purchase price, but now the client want a house 800,000, this happened a lot. And then the seller said, okay, if you put down 120,000 down, I will carry back 80,000. Will this work for the lender that we help them to buy the home? Not every lender do allow, but some lender allow carry back by the seller. But the monthly payment of the 80,000 the borrow from the seller will be accounted in the DTI. And if the DTI works, the loan works. But in this case, I know for sure that it doesn't work because he only qualified for 600.
Yep.
I don't think it's gonna work with the DTI thing. But yeah, just to answer, is carry back is okay? Yes, but the DTI not gonna work. Okay, thank you, Mr. Lee. Please send the material you training today. It's good. All I send you is just question, right? Okay, actually, I'm gonna send you the tax because in my slideshow there's only question, there's nothing else. So I will send you the tax table. Any other question before we go?
Good, thank you.
We good?
Thank you.
We good?
We're good, thank you.
Thank you, everyone. And remember to sign up for the volunteer thing. It's gonna be fun. We're gonna make it like a trip. We enjoy the beach and we do some good work at the ocean at the beach.
So what's next?
What next? We're gonna go to the beach. Pick up trash.
Which beach? Which
That's why
beach?
we have to work on which location.
I see, okay.
Hey, Eric,
Yeah.
I see you now.
I will send you
Oh, hi,
emails.
yes. Hi.
Oh, I'm game. I can pick up trash. I do that at home.
Oh, I do that all the time. Good job. Anything else?
All
Eric,
right,
you
thank
say
you,
something?
everybody.
Thank you.
Nice to meet you guys.
Nice
Bye.
to meet you.
Bye.
Bye, Eric.
Thank you, everybody. Thank you.
Okay, bye. Thanks.
Bye, everyone.